Hey everyone, welcome back to Bonnie's Life. I'm Bonnie, and today we're diving deep into one of the most expensive psychological traps in trading. Why smart, rational people suddenly turn into deer in headlights when it's time to cut a losing trade. If you've ever watched a small loss turn into a portfolio disaster while telling yourself it'll come back, this episode is for you. Before we start, let me ask you something. How many of you have held on to a losing trade way longer than you should have? Don't worry, I won't ask you to admit it in the comments. We've all been there. In fact, studies show that around 90% of traders lose money. And guess what? It's rarely because they can't analyze charts or read market trends. It's because of what's happening between their ears. With the current overall excitement of Bitcoin hitting an all-time high, it's important to provide this warning during this euphoric phase. This warning is applicable on riding a winning trade as much as sitting on a losing trade more than you should. Today, we're going to explore the fascinating and sometimes brutal psychology behind why traders freeze when they should be cutting losses. We'll hear from Nobel Prize winners, legendary traders, and leading financial institutions about this phenomenon that's literally hardwired into our DNA. And yes, I said DNA. We'll get to that in a moment. But first, let's talk about what loss aversion really is. Daniel Kahneman, the Nobel Prize winning psychologist who revolutionized our understanding of decision making, put it perfectly. Loss aversion refers to the relative strength of two motives. We are driven more strongly to avoid losses than to achieve gains. Think about that for a second. We're not just talking about being careful with money. We're talking about a fundamental asymmetry in how our brains process gains versus losses. Research consistently shows that people feel the sting of a loss twice as intensely as the pleasure of an equivalent gain. So if you make $100, you feel good. But if you lose that same $100, the pain is twice as strong as the pleasure was. This isn't a character flaw, it's evolution. Our ancestors who were overly cautious about losses were more likely to survive famines, predators, and other threats. The problem is, what kept our ancestors alive in caves can absolutely destroy our trading accounts in modern markets. Now, let's talk about hope. And I'm not talking about the inspiring kind. In trading, hope becomes what I like to call the most expensive four-letter word in the English language. When you see that trade slip into the red, your rational brain might be screaming, "Cut it! The setup is invalid. Live to trade another day." But your emotional brain, the one that's still grunting in a cave somewhere, is yelling even louder. It might come back. Hold, hold. This is where traders start outsourcing their exit strategy to everything except their own decision making. Suddenly, you're not following your trading plan anymore. You're hoping that the next news headline will save you, or that some technical indicator will give you permission to hold on just a little longer. You're giving the trade room to breathe, which is really just a fancy way of saying you're too scared to take responsibility for the loss. Jesse Livermore, one of the greatest traders in history, understood this better than most. He emphasized that the human side of every person is the greatest enemy of the average trader. Livermore made and lost fortunes multiple times, but he always came back because he understood that psychology, not analysis, was the real game. Warren Buffett, arguably the most successful investor of all time, has two simple rules. Rule number 1, never lose money. Rule number 2, never forget rule number 1. But here's what's brilliant about Buffett's approach. He also said, you don't have to make it back the way you lost it. This is profound wisdom that most traders completely ignore. Paul Tudor Jones, one of the most successful hedge fund managers in history, puts it even more bluntly. Risk control is the most important thing in trading. 90% of any great trader is going to be the risk control. Jones also warns, don't be a hero. Don't have an ego. Always question yourself and your ability. Don't ever feel that you are very good. The second you do, you are dead. So what's the solution? How do we overcome millions of years of evolution that's telling us to avoid losses at all costs? First, let's talk about the beauty of the hard stop loss. Think of it as your trading seatbelt. It's not attractive, it's mechanical, but it's often the only thing standing between you and a blown up account. A stop loss is you telling your brain, hey, I'm not smarter than the market, so I'll automate this decision before my lizard brain can intervene. Here's a mindset shift that can change everything. Start thinking of small losses as tuition fees. Every trader pays a certain cost to the market. It's the price of playing the game. No one gets every trade right. The professionals just get better at losing small. Let me leave you with this thought. Freezing in front of a loss doesn't protect you. It exposes you to even greater risk. Every moment you spend hoping a losing trade will come back is a moment you're not looking for the next opportunity. Every dollar you lose holding on to a bad trade is a dollar you can't use to make money on a good trade. The next time your gut says maybe it'll come back, ask yourself this question: do I want to be right or do I want to trade another day? Your job is to trade well and stay in the game for as long as possible. Everything else is just ego. Warren Buffett said it best: every loss is a lesson if you learn from it. The market is an expensive teacher, but it's also the best teacher you'll ever have if you're willing to listen. That's a wrap for today's episode of Bonnie's Life. If this resonated with you, smash that like button, subscribe for more trading psychology insights, and hit the notification bell so you never miss an episode.